at 2 to 4 p.m., which works out perfect. And I do get them on my phone perfectly over in Thailand. Before I signed up with the service, I asked them if they would check it out and just do a test trial run, so they did that with no problem. Very nice about it. Everything works smooth, so I signed up for it. Also with this, you get an email at the same time. So if I'm not in the office, I can get a text message, and if something needs to be done, I can jump on the internet as soon as possible and take care of business. Usually it's one a day. About maybe once or twice a week I'll get one in between the day. Changes being made on what he thinks the currency's going to do, or some news has come out, and he's usually always monitoring his trade. Here's the emails that I receive from FX Day Trader every day, and so we'll go over this last one that are received at 4:01 p.m. Thailand time, which is 4:01 New York time, or 3:01 Houston time. Okay, and here's what he said in the email. He wants you to put in a limit order, valid for 12 hours, which right now it's 2:30, so it's getting pretty close to getting past that. But at the same time, this order is getting pretty close to being placed. Okay, so we're going to sell the euro against the US dollar. Limit 1.3633. This is your stop loss. You want to put that in also, and then you will put in, this is your take profit. You will put these in. This will be a limit order. This will be a stop or stop loss, depending on the broker that you use. And this one will also be a limit. And most of his emails are pretty easy to understand like that. It's short and simple. Here's one that he did yesterday. Sell the euro yen, yada yada. There's your prices. Sell the US dollar yen. Here's your prices. Okay. Now, the only one that got filled was the US dollar against the yen, and he went ahead and stopped himself out of that loss and just took the loss. That's no big deal. In trading, you will have losses. That's okay. That's part of doing business. That's going to happen. Don't get too scared. Just make sure that you do have enough money in your account to cover some losses. And like everybody always says, don't trade with what you cannot live without. So if you lose everything, okay, it's all right. Your lifestyle is not going to change. Okay, I'm going to walk you through this order on my Interactive Brokers demo account. You cannot open a demo account with them unless you have already an active account, so don't even try it. Most of the other companies out there, they will let you open a demo or play account for about 1 month without putting any money into it, and opening up an actual account. And I recommend doing that. Do it for at least a month. Learn their system, learn how their orders work, learn the definitions. Study on the internet. YouTube is pretty good. There's lots of information out there for free. Just take the time to find it. Use a demo account. Get used to using a demo account. Matter of fact, let me show that to you right now. Okay, here we go. It took me a little while to find this demo account with them. Just type in your favorite search engine, Thinkorswim Paper Money. This will come up, and there's your paper account or demo. They give you $100,000 that you can virtual money just play around with, and you get used to their system, whatever. Usually every Forex broker has this. Here's their different platforms that they have. This is the desktop trader, which I just checked out for the first time tonight. Looks pretty nice. This is their web-based format, and then on a lot of your smartphones, you can download the software on that also, and that's something I need to do. All right. Speaking of Forex brokers, I'm just gonna show you how many pop up. Forex brokers, hundreds of them. Make sure you do a review on your brokers too before you decide on who to go with. Do a comparison. Pull out an Excel spreadsheet. Make your own comparison charts on the things that matter to you, and go from there. Okay. All right, folks. Here's a chart of the euro against the U.S. dollar. This is the trade. I'm going to run you through this trade that the Forex day trader sent out. Okay. Back when he sent out the email, it was 4 a.m. New York time. About 4:01, so about right there. Okay, you can see the euro was at about 1.39 something. Okay, he wanted you to put in a limit order at 1.3633. So what he was saying is, at 4 o'clock, he thought that the euro against the dollar was going to move back up from this area up to 1.3633, so about right here. I'm sorry, up in here. Okay, and as you can see, it since that time, yeah, it has made an advancement back up. Okay, so he said this is going to move back up. The euro is going to go up against the dollar. Put in your order here so that when the rate gets to 1.3633 or better, sell the euro, which means short. You may have heard, and I'll go over this more in a minute, the term go long or go short or shorting. Go long means if you place an order to go long, you think that the price is going to go up. You want it to go up. Shorting means you think the price is going to go down. So what he said was, I think the price is going to go back up to here. Go ahead and wait, and then once it hits there, your order will already be programmed in, and then it'll activate, it'll trigger, and then he says I think it's after that it's going to reach its top and then come back down to 1.3433. So down in here. Okay, that's the 1 day, as you can see. Okay, here's a 5-day chart. Okay, so here's 1.36633 in this area. Not too much farther away, but we only got an hour and 20 minutes left, so we'll see what happens. Okay, so put your limit order in there. Once it hits that, your order will be activated to sell at a take profit of 1.3433 down in this area. Also, you will put in a stop loss at 1.3869, so quite a ways up in here, so that if it moves against you so far, instead of taking a big loss, go ahead and cut your losses